1st. It is going to be interesting to see how the week closes. I always love Fridays, well, for a few reasons. It's Friday, and the weekend is here. I have my sister coming up and her family visiting for some skiing this weekend and for the next week. And, of course, it's a Friday close. The weekly charts depend on the Friday close for some long-term strength or weakness signals. The stock market has had a bounce this week, and now we're going to see how do people sit with the market. Are they going to dump shares into the end of the week? Is it going to just hold tight in this sideways little pattern we've seen over the past 5 sessions? Or are we going to see short squeeze and move higher? Very, very difficult to figure out what this market is going to do, hence the increased volatility, the increased volume. It's all over the place, and that is why we are in a cash position. Mixed signals and low odds of being able to pick a direction. If we take a look at cycles, we do have about 10 days for this market to put in a short term, kind of to have the next run. So even if today sells off, we still have an overall bias with the majority of time cycles pushing higher. And of course, that's what we've seen. We've talked about how we have this red section, we have a major bottom coming in place, and the market's been volatile, but it is working its way up. It may not feel like it to some people, but the market is working its way, and it is showing another 10 days of general sideways to upward bias. Now, keep in mind, when the trend is down, when cycles go up, and I teach this in my book, Technical Trading Mastery, we get cycle skew, which means if the trend is down, but the cycle is up, it doesn't mean price is going to go all the way up. It just means price is going to, it could be muted. It might just go up here and really just kind of grind sideways and barely move up. And as soon as the cycle tops out, because the bias is to the downside, it drops very quickly and sells off again. And in a bullish environment, it's the opposite. We get positive cycle skew. So the price moves up, and then when we have a downward cycle, you'll get a smaller pullback. And as soon as there's an upward move, it really just stretches and floats higher. It's very buoyant in a rising market. In a falling market, the market is heavy. When the trend cycles go up, it struggles to go up. But as soon as the cycle turns down just a little bit, it can drop very quickly because it's heavy and it sinks. So that's kind of where we are in the grand scheme of things. If we take a look, let's go take a look at the markets again here. So we have the markets down about 0.5%, the NASDAQ. The Russell 2000 is down about 0.7%, which I find kind of interesting because generally we've seen the markets sell off strictly because of the Magnificent Seven, which do most of the heavy lifting. But the reality is today we have the Russell 2000 down even more, which is kind of more broad market. And it's telling us people are actually just dumping a lot of shares today. We had some panic selling yesterday. We got up to 3 at the closing bell. And so we're seeing the majority of the stock market fall today. The NASDAQ is still down 0.5%, but not quite as much as the Russell. So I'm interested to see how today is going to play out. It's a little bit different than the Mag7's driving this the drop today. If we take a look at the Magnificent Seven, it is really struggling. While the stock market has bounced, we've seen the Magnificent Seven really just trade sideways. And that's what I was talking about, like with cycle skew. When the trend is down, if the stock market does have a bounce, which it has, but an asset class really struggles, it says it doesn't have a whole lot of strength. And as soon as the stock market starts to turn down, the selling bias, which is why I'm interested in the Russell 2000 today, because that's kind of the general market. If people are dumping shares, it could bleed over to the Magnificent Seven, and we see this sell off and go down much quicker than the rest of the markets once it starts. So that's kind of what has caught my attention, and not a whole lot of other stuff is too exciting this morning. We do have the dollar has had a little bit of a bounce recently. It's pulled back this morning in overnight trading a little bit, but we have gold is flat, silver's down a little bit, Bitcoin is flat. You can see silver's pulled back to the 20-day, so it's had a nice controlled pullback. It actually is pretty much flirting with a oversold market, so it's had a nice impulse move to the upside. Now it's fading down, stair-stepping its way down into a support, so it looks like it might try to find a bottom and move higher here. If we take a look over at gold, it's probably done something similar, although gold generally holds up. Yeah, gold's kind of done the opposite. It's been floating higher and hitting new all-time highs and riding up this 5-day moving average. And this is why, I keep saying gold is the easy play. If you're playing the precious metal space, if you hold physical metals, if you trade the precious metal space, gold is kind of the play to be in if you just want to make money and not go through the roller coaster ride and have something that is in a rising tide and goes up more than, maybe not percentage wise as much as miners and silver, but you want the trade to work. Gold is that play. And it's been like that for a long time. We've been talking about it ever since it broke into the new bull market back in 2019. It broke out of this huge base. We talked about it over here, which is where I picked up a lot of physical precious metals. We're in this giant bullish phase. We hit that 2750, and now we're just into this kind of icing on the cake, the rest of the world piling in, driving it up, I think very close to a major stock market and economic peak before we go into a bigger pause and correction before gold takes a run higher to probably the 5,000 to 6,000 range over the next few years, and potentially a whole lot higher. Taking a look at, let's take a look at oil real quick. It is flat, but overall it has a bearish price action as well. It's kind of created this little bear flag, and at any point here we could start to see it move down. Looks like there's some pretty big volume today to the downside at this point. It keeps poking on this 30-minute chart. It keeps poking up into these overbought territories, these red shaded background areas. We're now into the pink line, which is the 20-day moving average. You can see the pink line on the daily chart as well. The pink line on this 30-minute chart is a mimic of the 20-day moving average. This is not the 30 period, like a 30 period moving average for the 30-minute chart. This is the pretend you're carrying over the daily moving average onto the 30-minute chart. I like to see the granular look, but I still like to stick with the longer term moving averages to see how it moves up and kisses these levels intraday. I find I get a lot of kind of insight and comfort seeing the granular details. The devil's always in the details. And this is the chart that I get that feeling, not only from overbought, oversold, but we get panic, we get FOMO. This chart also tells us the trend direction, short-term trend direction. So this one chart is worth like a million words, or really to me anyway. Let's go take a look over at the hot list. We do have GDX, silver miners, copper miners, gold, silver, energy, and bonds. Pretty much these are all the things that are more or less disconnected from the stock market. Yes, gold and silver miners are stocks, but they're pretty much powered by gold and silver. Well, same with copper. It's a metal. So it's commodities and energy, which always do well near the end of a major super cycle to the upside where we go into a financial reset. And bonds are disconnected from the stock market, and they've been moving up. So we have all of those things still in sync, and they're all clustered together at the top, which is leading me to believe we are very close to I think the stock market may have actually put in its true top. I know I've been talking for a while, but things seem to be really changing in terms of momentum and strength of the markets. And I see a lot of that on our daily chart and the weekly chart here of the SP 500. What's happening right here is very similar to what happened right over here. In fact, again, I'm preaching to the choir here. It's a lot worse now than it was over here. This initial big sell-off we saw down here in this little bounce, we're having the initial sell-off. We're having the start of a bounce. And this time around, I feel like there's a lot more damage being done. Anyways, we'll see how the market goes. I have a fun evening and weekend planned out. I'm working on a project here where I'm machining out some big parts and making some very custom brackets and special hinge system. So I got this huge 2.5 inch by 2.5 inch block of aluminum or bar that I've cut into a block. I've been tracing out some parts that are going to be using on a hydrofoil system, carbon wing. And so you can see this great big block, and I'm going to be machining it out. I started last night, but it is going to be a very interesting piece and part when it's all said and done and rounded and stuff. But love making stuff. And this weekend is skiing and families and food and building, making stuff. Anyways, have a good weekend, and we'll talk to you soon. Bye-bye.